Welcome to the CloudSapio Cybersecurity Sync. I'm joined today by Jake Pimental. He's from Tennis Finance. Hi, Jake. Welcome to the podcast.
Hey, Matt. What's up?
Great to have you on today. Really excited to understand more about Tennis Finance and everything that you guys do over there. So why don't you start with just a high-level overview of what Tennis Finance is for anybody that might be unsure.
So what we do is we help banks, fintechs use AI to automate compliance and also get product insights. So what does that exactly mean? Is one of our products, what it does is it'll look at all your communications and be able to pull out specific compliance violations. Say, hey, XYZ consumer faced this issue with payments or a false report. What we'll do is we'll automatically flag that within and look through every single conversation, flag that, bring that up with the compliance officer, compliance team, and then be able to actually create plans to fix issues on a proactive basis. So we've taken this process, and usually once you get to the $100 billion bank, 500 billion, it's a 2-month process. We've gotten that 2-month process down to about 2 to 24 hours using software and AI.
Wow.
And yeah, that's just a little bit about us. And really our end vision is we want to create pretty much the back office brain of risk and compliance for financial institutions. Yeah, that's a little bit about us.
It's fantastic. So is this tool kind of based on a specific security framework, or is it like based on PCI compliance, or is it kind of just based on how a company in the financial industry should function?
Yeah, it's more, instead of any of that sort of compliance, it's more so about financial services compliance and consumer protection compliance versus like a cybersecurity, like SOC 2, anything like that. It's kind of funny. Compliance is such a broad thing, but really it's like, that's our specialty. It's like, how do we, help banks, get protected, but also protect their consumers as well? Some businesses, there's stuff there. But also address issues within their products and their offerings, right? And that's super valuable. But yeah, none of the SOC 2, which is PCI or anything like that. None of the cyber stuff.
No worries. I completely understand compliance is a very broad term, and I'm not as familiar in the financial sector. So how long has Tennis been around for, and what got you guys started?
About 1.5 years or so. And we were actually building banking infrastructure and payments before, with also with crypto on and off ramps. And our partner banks like, hey guys, we can't, do this use case anymore. And we built relationships with tons of banks, and we saw a couple problems popping up within the space, especially with partner banks and fintechs. And also, I was previously a compliance officer and PM at SoFi, who launched our investments arm. So I got to see what it takes to take regulated products to market. So I'll go from 0 to hundreds of thousands of members, as well as other stuff, securitizations, all this fun stuff. And we saw a couple opportunities, and with my experience and talking to everyone in this space, hey, let's really dive down into how good generative AI is and where we can provide the most amount of value. And so we talked to we've talked to us probably close to 300 compliance officers now. And we have also our own private community of compliance officers. And we just triage different problems. There's stuff here, there's stuff here. And you kind of just figure out, working with different customers, where the priorities at, where they're willing to pay, kind of the biggest issues, and how much value you can provide. So our first product we call Volley, or Quick Checks, which is a marketing AI agent that helps marketers create compliant marketing material. That was something I experienced at SoFi, which is, hey, I need to create something, needs to get approved by the compliance officer. What if I had an agent, like an AI assistant, like Grammarly for compliance, to actually give me the right copy the first go around, versus waiting back and forth 1 week to 2 weeks with the compliance officer. So we built that out. Fintechs love it. They're really excited about it, and kind of helps a little bit with the back and forth. But we really learned a lot working with a consulting firm, and some other partners as well, about other things that have a lot more value, right? And we really that was the first step. And then going to the second product is, which we call Rally, which looks like, what is AI good at? AI and LLMs really good at looking at a lot of unstructured data, conversations, text, emails, and turning that into structured data, right? So from raw conversations, I can actually grab incredible insights like never before, right? This just wasn't possible before good generative AI.
Right.
And so working with different partners, we realized, wait, you pay X amount for these specific results. People are manually listening to conversations. They're manually doing this report. Like, wait, we can just, to a really high accuracy rate, actually just replicate this and save hundreds and hundreds of thousands of dollars, hundreds of hours, and like this manual process, and do so much more from a risk and compliance perspective. That's one, going to make regulators happier, and then like two, like actually make embedded finance be a thing. So I can go in about, like, you probably don't know too much about finance, embedded finance, and happy to talk a little bit about that. I think that's super interesting for people who don't know about fintech and finance. If you want to learn real quick.
The space is yours, so please, I'm always looking to learn. I don't know as much, but the audience is definitely going to be interested.
So in the US, right, and this is actually pretty popular in the UK as well, you can't just launch a neobank. You can't just be like, hey, I'm going to hold people's money and give them interest or do loans, right? You actually have to be a licensed entity, a licensed bank, right, a chartered bank. And so what happened is, in the late 2000s, early teens, banks were like, we need to get more deposits, but like we need to figure out new ways to do this. So what they did is start partnering with technology companies. Think of like the SoFis, or I worked at SoFi, right? I think they partnered with them. Well, SoFi wasn't a bank starting out, but maybe loans. They partnered with them and saying, hey, we will hold your customer money, and we'll just view you as a technology company, right? And so as a way for them, one, to get more deposits. And why do banks want deposits? Why do they want it? So you know why? Why do banks want deposits?
Because they probably want more money in on their books.
Yeah, to lend out, right? That's how they make their money, right? So they want more deposits, right? Like, hey, if we get more deposits, we can lend out more, make more money that way as well. Like, you can do whatever with it. That's, imagine banks are like hedge funds. Don't quote me on that. I shouldn't have said that. They're very risk averse. And so what happened is, whenever you launch a neobank, you have to partner with a partner bank. That's what they're called. But come around this time last year, the past couple of years, everything happening with crypto, all this stuff, the OCC, CFPB, everyone's coming down super hard on these partner banks, because now these technology partners, they're marketing the bank. And if the bank doesn't actually like oversee everything the tech company does, it's like there's going to be a ton of issues. So there's this huge disconnect that's happening in the space between like, hey, I'm a bank, but you're a tech company who's marketing my services. I need to actually properly watch you. There's all these OCC enforcement actions letters happening. And so it's a big, big mess. Like all these, and I haven't gotten a middleware yet. Sorry if it's a little all over the place, but middleware players kind of realize, hey, banks need this tech to connect to fintech. So there's middleware players. Synapse just actually went into bankruptcy, unfortunately. I don't know if you heard about any of that stuff. And there's middleware players that build the tech to connect them. Some are doing okay, some are doing well, but it's been really rough. And so, but the thing is, the thesis, and if you look at the core market, fintech is growing at an exponential rate, embedded finance rate. Yeah. Two new tech companies want to build more ways for people to work with money, and there's also all these new fintechs who are focusing on very specialized verticalized offerings. Look at, my buddy works at Mudflap, and they focus purely on truck driving companies, or truck drivers, right, at those companies. And so all that's still exploding, but compliance is coming down super hard. So going back to tennis and how we think about it, one of our ICPs is partner banks. So we help partner banks better monitor their fintechs by tapping into their communications automatically using AI to, one, like flag out compliance issues, but also any other issues that they want to bring up and help them do that. Yeah, so that's fintech in a nutshell. Now you know. Now
That's
you
so
know.
cool. So it kind of
Yeah.
is like it's bridging that gap between where there used to be this kind of like disconnect where what's happening on this side, what's happening on that side. Now it's kind of like creating this two-way communication through your platform
Yeah,
to provide that transparency.
exactly. So Cross River, one of the biggest, they were one of the pioneers in space, and a lot of respect for them. They got an enforcement action letter last year about, hey, and the problem that they faced was, hey, the regulators requested, can I see your loan data for this specific fintech? And then Cross River was like, okay, how do we even grab this? Like the fintech has the data. How do we even grab it?
Mm-hmm.
Right. And so there's a couple really interesting things happening in the space where one, like we're going to go much more into data sharing, better data transparency and better oversight. And that's kind of where one of those pieces that make that happen, right? If you're automatically connected to the fintech's communications and the fintech's more than happy to opt into that because it's less work for them, the partner bank can really see what's going on, address issues, and help address compliance issues before they can become a big issue.
Mm-hmm.
But yeah, man, that's a little bit about what we're doing. Some of our stuff. We're also working with, you know, we'll be working with larger banks as well from a first party perspective. Not we call that third party, right? The partner bank perspective.
Mm-hmm.
We're also going to be working with banks from a first party perspective with their own actual interactions with their customers versus through third party.
Wow. So what's the overall feedback that you guys are receiving right now from, and what areas, or I don't want you to name any customers exactly, but like what spaces?
We can't.
Yeah, that makes sense. What spaces are receiving the most like value from this?
What spaces or what
or like what companies, what industries,
Yeah, so I mean fintechs, banks, right? Like financial services. Also talking to a couple asset managers as well. Like all of them have to do this. Like every single one has to do this, right?
Mm-hmm.
They all have to do these things. So it's like we're bringing in automation capabilities that weren't possible before. You literally couldn't look through all communications work. Now you can. And better oversight. I'd say some really interesting challenges and issues that people always are questioning about is like, what is the accuracy? How do you enable pure accuracy? And then also we talk to regulators, we're talking to tons of regulators about this and they're great. They're like, how do you ensure accuracy? How do you have the right safety checks in place? How do you have the right oversight of the actual AI who's having oversight? And so that's super fascinating. And so what we're going to have, what's really interesting from a tech perspective is you actually have to have oversight of your AI and be able to showcase your monitoring, your oversight, your safety checks with humans in the loop. So it's very funny, right? It's like almost like you have to have multiple layers on top of your tech to have checkpoints and safety. And so that's been brought up a ton by regulators, right? Also, potential customers, also current customers and partners. That's like a huge, huge issue. And so with all these AI companies who are building, it's like, how do you ensure this? For some things, which is low, what do you call it? Like low stakes. It's like, it's okay. You're doing like just looking at broad data, you can get a gist of it. And we do that. But also for high stakes stuff, it's like, you have to have varying level degrees and then showcase degrees of confidence and showcase that degrees of confidence to your customers. And then also be able to improve on that and then have multiple checks after the initial implementation.
Right.
Anyways, I digress. But some of the stuff that they're thinking about.
I think what you just touched on is kind of the way something I've been noticing a lot in the AI space and the companies I've been talking to is that it's basically the AI has become a funnel where you start with a massive amount of data, the AI funnels it down, and then it gets to the point where it needs human eyes. If you put the human eyes up at the top of the funnel, it's completely inefficient. It would take way too much time. But you basically, once all the data is put down to human readable, or where it's like more manageable, you put the human eyes over it, ensure its accuracy, and then you move on to the next data set.
Yeah. Yeah. I mean, kind of. Yeah. No, I agree. Actually, I completely agree. It's like, it's just, hey, we're going to look at, imagine this, right? We got to look at 100,000 conversations.
Hmm.
As a human, maybe I could spot check like a couple hundred, right? And
Right.
it depends on how you're looking at these conversations, right?
Right.
And so if you're actually doing a spot check of it, like that's great. And we found this to be the confidence level of that. And then you can showcase that confidence to maybe your board members or your exec team or even regulators, right? Like, hey guys, like, yes, this is, it's not an actual human, and sometimes it's even more accurate than a human,
Hmm.
what we found. But you need to be able to showcase confidence and varying degrees of confidence levels, right? If you look at KYC anti-AML software, it's like, it's pretty good, but it's never going to be 100%. But how can you just showcase that, do spot checks, and enable like just progression to more accuracy, or at least just having like being transparent about confidence levels, and that's super important to everyone out there. So
Yeah, absolutely. Makes perfect sense. Jake, I want to shift gears here just for a second because I want to learn more about you. Tell me a little bit about your background. What kind of got you started in the finance space and how'd you get to where you are today?
oh man, it's a long journey. Um, wow. Um, so yeah, I started my career. I was in South Carolina. I was like a combat medic in the Army, and I was like just obsessed. Like I was just always starting businesses, and I just loved it. And then I was going to be a doctor, but I was like, I don't know if I want to do that. And I just had the idea of like, if I would really want to learn startups, and I was just obsessed with it, like tech and startups. I don't know why. Maybe it was I graduated near the social network and stuff like that. And
Hmm.
I don't know. I just always thought it was cool. I was like a scientist. Like I love like building stuff. Even when I was younger, I was obsessed with Legos, and I
Same.
love learning. Yeah, I love learning everything. It's as bad as that sounds. It's like cool, like AI, crypto. I've learned a lot, and it's like I was obsessed with DeFi for a bit, and I just went out to Silicon Valley. I was like, I just need to like go out and work in person and
Hmm.
understand. So I just drove out with nothing. Like I had $1,000 in my bank account,
No kidding.
and I was like sleeping in Chinatown on like paying like $20, 20 something bucks a night, with like three other people. It was kind of ridiculous. But I hustled my way into an investment banking startup. I worked at one other startup before doing cold calls. That was helpful. And then did an investment banking startup and got like a quick story is they and that's actually where I met one of my boss who eventually became my boss at SoFi and is an investor and a good friend and advisor of mine. And he I get there and I'm interviewing for these two jobs, like the cold calling job. Yeah, I'll get that. Like, cause I thought that was one of the best culture startups I've ever worked at. And this other one, I'm like, hey, investment banking, I'm gonna make a lot of money. I get to learn finance because I love trading.
Hmm.
And they're like, Jake, we're not gonna hire you. Uh, you don't have any experience. I was like, okay, um, all right, that sucks. Like, fine. Like, I came out here, I came in person. I thought that'd be a good way to get it because they told
Hmm.
me to come out there, and they're like, we're not gonna hire you. I was like, okay. But I was like, hey, let me work for you for free. I sent an email to the CEO. Let me work for you for free. Get my Series 7. And if I get that, like, maybe you can hire me. He's like, okay.
Wow.
Said, okay. It's like, yeah. And so from that one chance of an email, it like actually put me down the path of fintech. And, you know, that startup didn't like do well. Not a lot of them do sometimes, but
Right.
um, from there, I went to SoFi, which was really impactful for my career and got to build at one of the most, I think, probably the fintech darlings of the teens, like probably one of the most successful fintechs of the teens. They're
Hmm.
public now. So that's amazing.
I see them everywhere.
Yeah. SoFi is crushing it.
Yeah.
I kind of regret leaving there. Like I only stayed there like a year and a half. kind of regret leaving so early, but I just quit that and started different companies. I just became obsessed with going back to starting e-commerce companies, tech companies, B2B SaaS, did everything, learned how to code. And then really over the past couple of years, focused back on the venture scalable route and going back to my roots of, I was in crypto and DeFi and then back to compliance because I saw a need. I have experience as a compliance officer, which creates validity with who I talk to. And, I had those licenses. I've seen this at SoFi. Really brought me back to a place as I think about founder market fit and where we can provide value and getting to product market fit. I have a little bit of an edge, but I am learning AI. I have learned AI. We've been in it for about a year, learning like deep things about AI. Which is a good amount of time, especially. But yeah, that all those things just traveled all over, and there's a lot of stuff in between there, but. Going back to building a good company, it's all about when you're trying to build, new technology or a fast growing company and creating a new vision, you just have to do these things and just go through the motions and know what not to do. And it's a lot of times it's really hard. Some people get lucky, I think, but years in, you understand like how to avoid things, how to build it, how to structure it, and it just takes time. And a lot of people aren't willing. The one piece of advice I'll say is definitely don't pivot your industry. Don't pivot your industry or pivot your audience. Just like keep learning and growing and see if there's like adjacent things you can build. Because I've loved it. Honestly, loved learning about tons of different industries. But definitely, if you're going to build something, make sure you can be the best in the world at this specific niche. If you can do that, you're obviously like going to stand out and build you could build a multi-billion-dollar company, right? But also have fun, work with incredibly smart people, which I'm very lucky to work with now. And yeah, man, you just get back to building and selling and just having fun with it and just make sure you do the things, create systems that optimize success. And that way it'll make you less insane. And yeah, just more than likely build a pretty successful business.
Sounds like what I'm hearing a lot of is consistency is key in building a company, staying within. Go ahead.
Maybe. I'd say organized consistencies, well thought out consistency, because people can just grind. I've done that and not realize their efforts or how they're using their efforts. You need to really look at your life, look at how your company's going, be like, hey, we have a really good, right now we just started implementing a outbound sales system. And it's like, hey, if we do these things in this specific way, this is our conversion rate, right? To this much revenue. If we reach out to X amount of people, this many demos, this many things, these are the benchmarks. This is kind of what we're seeing. These are probably higher because of the way we've structured our brand and our identity. This will lead to revenue, right? And so it's just a science at that point. You could still be figuring out product market fit a little bit, but those things, even along with fundraising and stuff like that, it's all these are things that people have done before and built before. If you do these things, it's going to lead to specific outcomes, right? That will more than likely work or not, but more than likely will. So I'd say make sure you have those systems in place and understand how you're running your company and how you're optimizing for those things of success, and you time them out right, and you plan those things out correctly. Anyways, that's the advice I got.
I love it. It's really, really helpful advice, and I think that a lot of people that are watching will take away a lot from that. Jake, I actually have one final question for you. Actually, I have two technically. Tennis Finance. Where did the name come from? Just curious.
So we reduce the back and forth between product and compliance to make it an ace every time. So our first product was marketing checks. And then we have our products. We have Rally, we have Quick Checks Volley, and then we have a private compliance officer community called the Country Club. Other names, like if you want to get into naming, I'm sorry, we're going to go over. But 2 syllables, got the domain, tennisfinance.com. It's really recognizable. It's relatable. It's a thing that's not just going to get lost like a reg AI. It's so dumb. Like, make it something fun, make it weird, make it like unique. And people are going to remember that. Like, people won't, like, they may not remember the company, exactly what it does, but it's going to stick with them. I had a really nice investor who introduced me to this multi-trillion-dollar, talking to him, like, right? And only because probably like they like me and they like the name and like it solves a pain point. I talk about pain, but we're the first ones that come to mind. So when you name companies, make it very like fun, but also relatable. So like, anyways, yeah. What was your second question?
I love that. No, the last question is just if people want to find out more about tennis or just want to get in touch with you, what's the best way for them to reach out, to get connected, to touch base with you?
You can go through my assistant. No, I'm just kidding. Yeah, just hit me up on LinkedIn. Who's ever listening, happy to just help. I've done a lot of businesses and yeah, happy to just give back. I'm not at IPO level yet, but it's all part of the process, all part of the journey, and it's fun. But yeah, hit me up on LinkedIn. You can probably just do me a LinkedIn. I won't give out my email, but yeah.
That's perfect. Awesome. Well, Jake, we really appreciate you coming on the podcast today. Thank you for all of your words of wisdom about business, about the starting a startup, finance, information about finance. We really appreciate everything.
Yeah. Hopefully it was helpful and hopefully people enjoyed it. And yeah, thanks for having me, Matt.
Absolutely. Everyone, thank you for listening to the Cybersecurity Sync. And until next time, we will see you then.